Stock markets decline across the board and, of course, across the world as well. The US Fed signaled plans to slow its rate cut plans in 2025. Nifty sensex decline 1% odd. Broader markets also trade slightly lower, but compared to the large caps, broader markets did much better. The rupee has sunk to a historic low of 85 against the USD. All Asian currencies were also weaker after a sharp rally in the USD.
The US Fed cuts rates by 25 basis points and says it's likely to cut rates only twice in 2025 versus an earlier estimate of 4 cuts. Fed Chair Jerome Powell says central bank would be looking for progress on inflation. Cautious commentary weighs on global equities.
SEBI tightens rules for SME IPO, says only entities with an operating profit in at least 2 of the previous 3 years will be allowed to file for an issue. Caps the offer for sale portion at 20% of the issue size. Also bars companies from raising funds to repay loans to promoter entities. Hello and welcome to a fresh new edition of Markets Forward, your go-to program as we prepare you for the next trading day. Today could have been a lot worse. I'm going with that. Because it could have been, and it was not nearly as bad as what we imagined before markets opened this morning. I'm Prashant. With me, my colleague Rima. Rima, hi.
Hi. So markets slumped nearly 1% on the benchmark indices. The Nifty ending below 24,000. But as you said, after that morning gap up, it didn't recover. After the morning gap down, it didn't recover, but it didn't even fall further. Yeah, it stayed where it was.
There was no further damage, really.
No further damage.
And actually, if anything, through the course of the day, you were seeing lots of these mid-caps bouncing. And there was lots of that happening. And we'll get to stocks and what moved with Hormuz in just a bit. But, I think the intraday is, let's just go back to the Nifty, tells you the story. The gap down, first 45 minutes of volatility, and then, of course, it flatlined completely all the way into the close and ended with a 1% cut. The Nifty Bank will come up next. And a similar kind of picture. Nifty held 23,900, which is a support which we highlighted in the morning. The Nifty Bank did not. It did break intraday, an important retracement, but then it came above it and then never looked back. Mid cap and small cap much better, relatively speaking. 0.5%, 0.75% cuts there. 1,100 stocks higher, 1,700 stocks lower on the NSE. And it was in line. I wouldn't say just another day, but actually in some ways it was just another day. Some amount of profit booking, but also a day in which there were lots of mid caps which went up on a tremendous amount of volume. So there was that as well. So it was not everything down, although it looked like it was everything down early in the morning. But that was just the first 45 minutes, as I said, and things improved quite a bit.
Indeed, and the advanced decline ratio was not as bad, right? We had about 2 stocks closing in the green for 3 in the red. Pharma was a standout sector on the way up. The Nifty Pharma Index ending with a gain of more than 1.5%, with names like Dr. Reddy's, Cipla, Sun Pharma, Apollo Hospitals all higher. BPCL, in fact, all oil marketing companies were also up and about in trade. Two-wheelers saw a little bit of green going for themselves. But on the way down, IT, banks, real estate, metals, all under pressure. But to talk about individual stocks, it's over now to Hormuz for all the stock movers of the day.
Well, it was a day where the broader market staged a bit of a comeback, still ending in the red, but the red is called an outperformance in the market that we had today. But the focus was on tech stocks, considering the sell-off that we had. It was a slightly mixed picture. We'll get to the positives in just a bit, but the stocks that ended in the red, LTI Mindtree was a standout, ending at the lowest point of the day, 5% down today on LTI Mindtree. Emphasis, the heavyweights TCS and Infosys also saw losses of close to 2% in today's session. A sector that held out today was pharma, opened lower but recovered swiftly into the green and stayed green, ending at the highs of the day. Ipca Laboratories was the top performer there, 5% higher. Positive brokerage commentaries on DRL and Abbott, and also good gains for JB Chemicals and Pharma and Lupin as well. And some news stocks that were impacted due to the news flow. SpiceJet, some news coming in earlier this morning, the stock ending 9% higher. Some positive brokerage commentary on MTAR Tech as well, 5% higher there as well. Mazda was after an order win, ending 6% higher in today's session. DOMS Industries block deal lock-in periods ending as well. And Stovecraft, after the partnership with IKEA, saw a bit of a spike but ended off the highs of the day. But stocks that ended at the 52-week low, some big names there. Asian Paints continues to grind lower, as does Nestle and Credit Access Grameen, of course, because of the MFI stress. But on the flip side, there were stocks that ended at record highs despite the fact that the markets were slightly weaker. KFin Tech is one of them. Positive brokerage commentary yesterday building onto those gains. Oracle Financial and Coforge and the mid-cap IT space that I was mentioning about, these are the stocks among the IT space that outperformed today. And BSE continues to grow from strength to strength. Back to you guys.
Thank you very much for that. IT will be in focus tomorrow because Accenture reports their numbers. It will be the Q2 quarter for. Sorry, it'll be the Q1 quarter for them. They had guided for a 3 to 6% revenue growth for FY25. Will they change that? And even on generative AI, because Accenture gives you generative AI bookings and the kind of revenues that it does. So watch for IT stocks tomorrow. But let's bring in our guests, Amrish Balika, Indian market expert, and Richard Jain, Vice President of Equity Research at Motilal Oswal. Richard, 4 days of losses on the trot. Have you gotten into oversold territory? Should we expect a bit of a rebound now, tomorrow?
Yes, very good afternoon, Rima. Very good afternoon to everyone. Well, if you look at last few trading sessions, in fact, in this entire week, we have seen correction in the benchmark indices, but the broader markets have not seen that kind of sell-off. In fact, if you look at week-on-week returns, Nifty is down by around 3% in this week. Bank Nifty is down by around 3.5%, but the mid-cap index is not even 1% down. So this clearly indicates that there has been a good buying interest in the broader markets rather than the benchmark or the frontline stocks. So we do not expect any significant down move in the indices because of this buying interest which has been seen. The 200 EMA last time when the markets corrected, it took support around its 200 EMA, and that 200 EMA is placed around 23,700. So maybe in the near term, 200, 250 points more downside could be seen. But I think that 200 EMA should act as a support, and we should see some momentum resuming from there. So as of now, even we are advising our clients to take a stock-specific approach, I think, where there are better trading opportunities seen rather than the index. And around that 23,700 mark where 200 EMA is placed, if comes, then the risk-reward ratio would become favorable to take some contra-buys in the index as well.
Okay. Those are levels, and gentlemen, good afternoon. Amrish, the market going to be a little tougher for the next 2 weeks into the end of the year, or you think looks good?
So it looks like I was saying earlier, I think that bounce back is done. We saw a very good, close to 1,000-point bounce from the lower levels which we had seen earlier. I think that is done and dusted. And now, going ahead, especially the Q3 numbers, I don't think we will have any positive surprises. I think it will be more of the negative news there. So I think that is what will create the pressure. And also Trump inauguration on Jan 20th. I think that's something else which most of us will be looking forward to, in the sense with some amount of fear, because you don't know as to how much of volatility he's going to add, and the tariffs which they'll introduce. So I think one needs to just wait and watch for a while. So the way I see it is, I don't see much of an upside from here. We can see a decent downside, but at the same time, I would say utilize that downside to buy and get your portfolio in shape, because possibly if you're talking of the next 2 to 3 years, this could be like a window of opportunity where you can actually buy your favorite stocks at a decent discount.
Okay, let's tell our viewers now what led to the sell-off, the reason behind the sell-off today, and that is the Fed shocker. Now, Federal Reserve, on expected lines, cut interest rates by 25 basis points. But Chairman Jerome Powell indicated that going ahead, there will be fewer rate cuts in 2025. Only 2 rate cuts next year versus, the Fed's own guidance of 4 cuts and consensus expectations of 3 rate cuts. And this weighed on markets worldwide. Steve Leisman joins in.
The Fed did exactly what I guess I said the Fed was going to do, which is the rate cut today and then project 2 more next year. But I think there's an interesting thing setting up. Let's listen to what Powell said about how restrictive he believes the Fed still is now.
I would say we are, though, in a new phase in the process, as I said. So. And that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation.
So he had said earlier that they're significantly less restrictive now than they were before, but still meaningfully restrictive. And this sets up this debate. I'm going to call it Powell and the Fed against Gundlach and the markets, which is that if you think the Fed is meaningfully restrictive, as Powell says he is, then he's going to drive down inflation further and he can do further cuts. But Jeff, obviously, and the market itself expressing some pessimism about whether or not the Fed policy rate is one that will drive down inflation further. I think that's the battle now for 2025.
What we saw from Chair Powell today is a bit more cautiousness on the outlook related to inflation. Some of that is due to stronger inflation that we've seen in some recent prints, but probably more broadly underneath the surface, it's more some anticipation of some potential upside inflation risk that may come from the second Trump administration. So if inflation continues to move down towards target, and if some of Trump's more inflationary policies are not necessarily put into play, I think you could potentially see even more cuts from the Fed next year. If the Fed stays higher for longer, that's going to create challenges for all of these other central banks to ease policy as much as we expect in our base case.
Well, that is Robert Sockin, economist at Citi, with perspective. And of course, Steve Leisman putting the entire Fed action in perspective. That's a global story. A lot of the sort of top stories today are macro-ish and rupee is another one, which we want to address. 85 mark to the dollar, even as all currencies fall in the face of a sharp rise in the dollar. The dollar index itself passed the 108 levels. Lata is here with sort of an update on what's happening with the currency and, of course, what the chatter is. Lata, over to you.
Rupee should have crossed the 85 mark even earlier, considering the amount of selling that's happened in the equity market and the dollars that have been taken out of the country. But the Reserve Bank was resisting it. It normally doesn't resist when it is a global trend. And that's what happened with the Fed sounding more hawkish than what the market expected. Market was expecting that the number of cuts will go down from 4 to 2, but they were not expecting the Fed to say that. They were expecting the Fed to say 3 for 2025, but the Fed almost coming in line with the market has kind of shocked, and you saw the dollar index go to 108 plus, and that led to about 15 to 80 basis point depreciation in all currencies. And the rupee was still the outperformer with about 15, 16 basis point cut. It crossed the 85 mark and there was some stability around that 85.07 mark. It appears that most of the long dollar positions got squared off at that point, and further demand for dollars were not there. Also, the fact that probably the trade deficit in November may not be as ugly as was earlier presented because of a possible double counting of gold was also something that worked a little bit in favor of the rupee and against too much of dollar buying. But the trend for the future, for the next quarter, for the next year, quite clearly is still downhill for the dollar. The expectation is that you must see the dollar go at least to 85.50 by the time the fiscal year ends. By then, one will know what are exactly the Trump tariffs. And for the end of the year, 2027, the emerging number is 87, which is about a 2.5% depreciation. The argument being that China in 2018, to counter the US tariffs, had depreciated its currency by 13%. And at that time, there was nothing like 60% tariffs. So now if it is anything as bad as even 20%, you should expect the renminbi to go to 8 to the dollar, and that would mean a 2.5% depreciation at least for the rupee. So 87 is the new number that the street is looking at.
Lata, thank you very much. 87 is the new number the market is looking at. Ambrish, any implications for equities?
It would, because clearly rupee weakening would clearly, add to inflation, no doubt. But at the same time, we should see the exports benefiting whenever the rupee depreciates. But again, the way things are, we don't know as to how the tariffs will play out post Jan 20th. So that's something to be watched out for. Otherwise, it should be positive for exports.
What are your thoughts in the top gainer today? That's Dr. Reddy's. Now, Dr. Reddy's has been an underperformer. Now, this year itself, Dr. Reddy's has underperformed the Nifty Pharma by nearly 25%. And the key reason for that is because the company is going to lose out as the generic Revlimid opportunity comes to an end, very soon. But do you think that, the pessimism or the correction is overdone? Nomura seems to believe, that, and which is why they upgraded the stock today. But where do you stand on Dr. Reddy's?
No, I think it was a bit overdone. At the same time, like what we have also noticed as far as US FDA is concerned, again, talking about Dr. Reddy, things have been quite clean and clear. So that also, I think, should play out. So I think it is still time to stock up Dr. Reddy. It should go to levels of about 1475, 1500 levels.
Ruchit, any specific trades you want to highlight? I mean, there's so many movers, both on the upside and downside, and strong ones. Particularly, actually, I want to say on the upside because, we were discussing with Ambrish earlier, K Fintech, Chennai Petro, IPCA, IOL, the small EMS companies, Avalon, Centum, and many more. 63 Moons has had having a terrific run over the last 2-3 months. From $450, it's now, of course, come up to about 1,000 plus. Reliance Power, I can go on. Anything interesting to your mind, chart-wise?
So, Prashant, yes, a lot of mid-cap and the small-cap stocks are continuously showing some positive good move. But one segment, I think, which has been consistently heading out, in the corrective phase is the hotel space. If you look at stocks such as Indian Hotels is there, Chalet Hotels is there, even EIH Limited is there. So I think this is one sector where the price move, price volume action is quite bullish from a technical perspective. For a fresh trade, I think if one has to look, then one can look at Chalet Hotels, where we recently saw a breakout last week itself from its previous swing high resistance, which was supported by very high volumes. And you look at last 2 or 3 days when the markets have corrected, we have not seen any kind of price-wise correction in Chalet Hotels. So I think the structure is quite strong. Short to medium-term traders can look for buying opportunities in Chalet Hotels over here with a stop loss below 950 and expect target somewhere around 1150.
Okay, we will thank Ambrish and Ruchit for joining in, get into a short break. On the other side, we'll get you some market outlook as well as the big events to watch out for. Stay tuned. Welcome back. You're watching Markets Forward. Now, in the latest board meeting, market regulators SEBI approved a series of key measures which are aimed at protecting investor interest and improving various aspects of market regulations. So there were quite a few on SME IPO, unpublished sensitive information, increasing disclosures. Yash joins in for the key highlights. Yash.
Well, Reema, to be precise, about 19 points were cleared by market regulator SEBI in its board meeting yesterday. One that caught the most amount of attention was the regulations, rather the tightening of regulations around small and medium enterprises IPOs or SME IPOs. That's been a point of concern for market regulators. Statements coming in from the regulator time and again in the recent past. A few things have been done by market regulator SEBI, which were an outcome of the meeting yesterday. They've said that a company which has an operating profit of 1 crore or more for the 2 preceding years out of the 3 years can only be eligible to bring out an SME IPO. They've said that the OFS portion of the IPO cannot exceed 20% of the issue size. Also, if the promoters want to repay any kind of debt through the funds raised via the IPO, then such IPOs won't get SEBI's approval. The third one, funds for general corporate purposes will be capped at 15% of the offer size or 10 crore rupees, whichever is lower. Selling shareholders can't sell more than 50% of their holding. Promoter lock-in in excess of the minimum promoter contribution will be locked in, 50% of it for 1 year and the balance 50% for the next 2 years. Allocation for HNI or NII category will be through draw of lot methodology. Also, related party transaction norms will be applicable on SMEs as well, something which we see on the companies listed on the main board today.
Thank you very much for that. And before we wrap, we'll get you the key market events to watch out for tomorrow. Abhishek joins in.
Well, Rima, to begin with respect to India, tomorrow a monetary policy meeting minutes will be out. Watch out for that. And RBI will give out the foreign exchange reserve data. Last time around, it was at $654.9 billion. With respect to Euro area, watch out for consumer confidence index. It is estimated at minus 14% versus minus 13.7% that it had come out last time. Some of the stocks will be going ex-bonus. Watch out for that. Bharat Seeds as well as Link Limited. We have a new listing tomorrow, which is International Gemological Institute, and some of the board will be meeting for fundraise approval of entities like Restaurant Brands Asia. They will consider fundraise via QIP. Piramal Enterprise to consider public issuances of NCDs, and Muthoot Capital as well to consider public issuances of NCDs. And last but not the least, watch out for Bajaj Auto. They will unveil the next generation Chetak electric scooter. Back to you.
All right, Abhishek, thank you very much for that. So those are a couple of things to watch. Last day tomorrow, and as we are slowly but gradually but firmly moving towards the end of the year. From Rima and me, it's goodbye. Thank you very much for staying with us on another edition of Markets Forward. We are back with more news and updates on the other side.